Hi, Dave Zagel here again to explain some federal tax receipt questions. We've been getting some questions on, all right, what's really the impact of changes in federal tax rates and how's this going to impact the economy and stocks and all that sort of stuff. So in the first video, we did an overview that discussed the total amount that the government takes in and some of the breakouts of where it comes from and also some of the impact of changes in tax rates versus the impact of the economy. And we didn't discuss estate taxes at all in that first video. So this is not state taxes as in one of the 50 states of the country. This is estate taxes with an E in front of it. And what estate taxes are is how much taxes your estate pays when you pass away. So a lot of people understand, some don't, but a lot of people understand that when you die, that money that passes on to your descendants or whoever you have specified gets that money, some of it may be subject to taxes at that point in time. That has changed a lot over the past few decades. And this chart that we have here shows the history of the estate taxes going back the past 40 years. So the line in orange is the estate tax rate, and the blue bars represent what the exemption amount is or was. By exemption amount, what we mean is what amount are you allowed to pass on at your death without it being taxed under this estate tax plan. And it used to be in the $1 million range for a long time in the 80s and 90s and even early 2000s, and it's ramped up significantly since then. So nowadays in 2020 it's almost $12 million per person that you can pass on before the estate tax kicks in, and that was bumped up significantly back when the Tax Cuts and Jobs Act was passed a couple of years ago, and that's where you can see 2018, 19, and 20 are so much higher. And that is set to expire. The Tax Cuts and Jobs Act actually has an expiration date. It expires on January 1st of 2026, even if Congress does nothing. So at that point in time, it will revert back to what it was prior to the Tax Cuts and Jobs Act, which was in the $5 million range at that point in time. If we index it for inflation, maybe it'll be closer to $6 million per person. So there's still a very large exemption where you can pass on this money without getting hit with estate taxes. Now, in terms of looking at what impact does this all have on federal tax receipts, we talked before about using the 2018 figure as a reference guide of $3.25 trillion was the total of what the federal government took in as tax receipts that year. So what percentage of the total tax receipts was estate taxes? It was 0.7%. And that's been pretty consistent over time. So even, this goes back to the point we made in the first video about there's always a lot of debate about tax rates and tax levels, but the economy is really the biggest driver of how much money the government takes in. So we can see that in this chart or this data set, we can see that even when the Tax Cuts and Jobs Act went into place, it bumped the exemption way up and the tax rate didn't move. So you would think logically, oh, well, if we're exempting more money, but the tax rate staying the same, well, we would see less money coming in as tax revenue. Not necessarily the case. As I mentioned in the first video, there's assumptions on higher tax rates and lower tax rates on what's going to bring in the most revenue. Sorry, but it's still the economy. So I know we can debate all day long about what the best tax rate structure is. The economy still wins. So when we look at estate taxes, there's a lot of political talk in all different directions about what estate taxes should be, what's fair, what's not. when it comes right down to it, it's not that big of an impact on the overall federal receipts. It's less than 1%. There was some times in the 80s where it was just a little bit over 1% in the 80s and 90s. But for the most part, it's been in this range of a percentage of the total tax receipts for the past 40 years, regardless of what the exemption was and what the tax rate was. So I point this out because we get some questions on a lot of estate tax planning and what does this mean for taxes? What does this mean for economy? All that stuff. What does it mean for stock markets? The truth is, there's probably more worry and talk about this than what is really necessary. It's just not a big piece of the overall tax receipts, and changes over time haven't really impacted much of what gets received either. So we can kind of take out all that noise. It's not that it's nothing, it's not that it's not worth talking about at all, but it generates a lot more noise than it actually does in tax receipts. The one point that I will make, and it's a little bit of a case for having not necessarily this high of an estate tax exemption, but a higher one than what we had in the 80s, was one of the things that an estate tax can cause trouble with is for somebody that owns a small business. So if you picture a small business owner passing away and leaving that business to a family member to run the business, if that family has to pay taxes on that right away, even if it's at a 40% tax rate, which is low based on history, that can really cripple a business. And it's not just that it impacts the business owner, it can impact employees and suppliers and vendors and customers. So it's important just to keep in mind, again, there's no exact right level, but if you picture a business, let's say the exemption amount is $5 million, and there's a business that's worth $10 million, and the business owner passes away, so now there's $5 million that's exempt from taxes, and the other $5 million is going to get taxed at 40%. Well, that's $2 million of a tax that somebody has to pay, usually within 12 months. And there's usually not $2 million sitting around. So what often happens is there's a forced sale, or the business might have to borrow money to make up for that. And that can, again, it just impacts a lot of not only the business owner, but employees, vendors, local economies, things like that. So not trying to make a case for what happened with the Tax Cuts and Jobs Act necessarily, but just keep in mind that there can be some negative impacts of the current estate tax setup, especially if you're trying to transfer small businesses from one generation to another. There's other possible solutions. Maybe you allow for the taxes to be paid out over several years. There's other alternatives, but just one thing to keep in mind is that these businesses aren't liquid. They can't just be sold right off the bat. So something to keep in mind as we look at estate tax consequences. But again, the main point here, and I should also mention, don't pay no attention to 2010 on this graph, because that was just a weird year for some government rules. But that's just an outlier. Don't worry about that. It actually didn't impact much of the tax receipts anyway. But the main point here is, when we talk about estate taxes, for all the noise that you might hear from lawmakers and politicians, it's more noise than it actually brings in tax receipts. So don't worry about it too much. We don't know what it's going to be in the future. Congress can change these rates anytime they want. They just need the votes. So there's not a whole lot that we can really plan for super clearly, even a couple of decades out, when we're doing planning for clients. We just have to have a general plan in place and adjust as Congress changes things. So I hope that helps on estate taxes and understanding the total impact and even what estate taxes are. If you have any questions, shoot me an email, call me. I'm happy to help and answer any questions you have.